All right, folks, it's another start to Finance Junkies with the only guy that showed up to work, because I guess the rest of these guys think that they think they don't got to work. I guess they think they don't have responsibilities or something. But okay, this guy's finally here. Here we go. 2 minutes in. Chris,
What's up?
You're late to work, buddy.
Listen, when the star shows up, that's when the show really starts. So I'm not late. I showed up on time.
Well, your mic doesn't fucking work, so fix your mic first, Mr. Star.
Right. Okay.
Goodness gracious. When the star shows up. This is what I deal with, guys. This is what my WhatsApp is dealing with. This guy's the star of the show. Look, now he's frozen. There he is. He's there. You're a little zoomed in too much. You zoom in every time so much. Like, no one needs to see all that, bro. We're good. I saw that in Vegas. I was close up. Your mic's still not good, but you're probably figuring that right now. So we've got a lot to talk about. I don't know if VITALY can make it today. I know we just introduced him back to the pod yesterday, but he got overtime work again today. This is what happens when you're doing cinematography stuff. So he probably won't make it. Carlos is gonna be a little late, but that's okay, because today was a big day in the markets and we got a lot to discuss, and me and Chris will be here to discuss it. First of all, Chris, before we get into it, how was your day? Then we'll start.
Bro, it started off nice. So I got, I was looking at the market. We hit CPI numbers probably, man, I've been breaking out lately. So I got to start using like salicylic acid or something. You think that, yeah, man, like if I drink milk, I tend to like whole milk. I ended up breaking out. So now I gotta take some salicylic acid, just clean my face more. But yeah, so when I woke up, I was like, oh, great, CPI numbers, they're literally right on target. So that was nice to see. The one thing that surprised me a little bit was just how accurate I was.
Wait, hold on. I thought when I said, how's your day going? I thought you were going to, talk about your day. Then I was going to introduce, I literally put it in the title, Chris. I said, Chris nails CPI. Yeah. And then you start up the show saying, you know what surprised me today? I'm just so fucking goddamn right about everything. I surprised myself how right
I'm just so good. I'm just so good.
All right, so let's get straight into CPI and we'll set it up from there, and we'll get right into it, get into the juice. After CPI, we're going to talk about that for like 10 minutes. We're going to discuss some portfolio changes I made today. One of those on Twitter, and one of those I didn't disclose to anybody. So you guys are going to see a new change I made today as well with the portfolio. So this is what Chris predicted. When did you do this, Chris? Like 12 months ago?
Yeah. So if you go back to my original tweet, so click on the other one real quick. The one up there, and then there should be
almost a year. Gotcha.
Yeah. And so one more, if you go, so this was my original. And if you click on the main thing, you'll see it actually expands out. So click on that. Okay. So these were my targets that I published November of 2022, right? So I just did some basic arithmetic. I used some algorithm to actually figure out, okay, what is the likely degradation of the interest rates going forward based on the CPI and stuff. So I took a lot of things into consideration, a lot of data points, and this is what I got. And this was just a soft target as to what I think would happen within a year. What I was not prepared for was just how accurate the October reading was, because there were times where things kind of like went out of whack, primarily in the summer, like pre-summer, when we had a lot of data around. Well, we had a lot of reductions in oil prices. So, that's the thing about trying to do modeling. When it comes down to trying to model things, there are certain asset classes that it's really hard to model. So as an example, energy, right? Energy can be one of those things that's just, you don't control it. Like, who would have guessed energy would spike the way it did prior to right around the Russian invasion? Like, no one could have told you like the Russia was going to invade. I mean, if you knew Russia was going to invade, like, dude, you killed it. But yeah, so when it comes to like commodities and stuff like that, it's hard to predict. And so they do have an outsized impact on CPI. So I definitely did not take energy going down as much. but it's gotten back to a point where it's right into my projections.
So you predicted, Carlos, what's up? Carlos is here now with us. You projected 3.2, and that's what we got in October. September you thought would be a little bit colder than what it was. It was 3.7 unchanged. And as you said, gas prices was the main thing. For those that didn't see the CPI data, energy went down 2.5% month over month. Gas prices went down, or not gas prices, but the gas part of energy went down 4.9%. Shelter went up a little bit, so it offset some of the decline. So Chris, here's the question to you. When is shelter going down? And if we saw shelter go down, do you think we would see a 2-handle in October itself?
I think based on the data that I'm seeing, bro, next 6 months, you're going to see shelter fall off a cliff. Like it's not like the biggest challenge to shelter has always been inventory. And I think once inventory starts to come, starts to rise, I think that's when we're going to see that the last level inflation start to make its way down to the 2s and below 2s. So like right now I'm checking out data around rentals, around price reductions on housing, what the average rate of housing was, and then different major cities around the country, and just seeing overall, like, what does the inventory look like? Because the minute the inventory starts spiking, you're going to see a lot more people likely to start reducing prices. A lot of the other factors that people have to take into consideration for 24 is that 24 will probably be the cleanest year after COVID where there aren't as many stimulus programs. So you've got student loans that have restarted now, right? That saps consumers' ability to spend. Housing moratoriums around the country are completely over. Housing courts are back in full swing and going through the backlog of those delinquent renters that basically never paid any money, and basically have been just freeloading off the landlord. So that's another thing. So those housing courts are unfreezing slowly. That's another major factor that should be playing in. And then of course
the housing market that you're looking at, is it just home buying, or does it include rentals?
Everything. Rentals, even short-term rentals. Right now, there's a lot of legislation that's being passed around the country that's putting a big damper on short-term rentals, which means that even those short-term rentals that are going to be coming in on the market are going to help boost the inventory higher. And then another segment is just Wall Street. The Wall Street home buying is pretty much dead. Like the cost of capital for them to borrow is so high, the cap rates don't make any sense, which means that some of them might even start unloading housing at the same time. So my whole thing right now is just, we have to take into consideration all those factors. And I think shelter is likely to be the next shoe that drops, and it'll happen over a longer period of time than some of the other changes. Like oil prices, that can go from $100 a barrel to $70 a barrel in like a month. Housing is not like that unless you have like some major crash happen. So,
on the downside, it can crash, but usually it doesn't go up that much because you can't make more housing that quickly.
In my estimation, I don't think we get a 2008 kind of crash in housing where things just go, belly up and we see 20, 30, 40% reductions in home prices. Instead, my thing is we will see housing end up being like Japan, where you're not going to see growth for the next 10 years. So if you bought today, you are buying at the top. Don't expect any capital returns until 2030. Huh?
You think so? I don't know.
You don't expect to see returns on real estate till 2030? That's your argument?
Yeah. I don't know about that.
Yeah.
Wow. Okay.
I don't know about that. I mean, the lower rate,
8% mortgage rates, these crazy Zillow prices, you could argue this shit is definitely pumped up.
But also the low rates that a lot of people either bought or refinanced in is an incentive for them to just hold it. In other words, you need really you need a lot of incentives to get these people to get out of.
I'll be right back, guys. I just gotta clean my face. 1 second.
Yeah, and if you want, you can switch us.
Yeah, Chris is breaking out for those. Carlos, you need to help him with this skin advice. He's like getting pimples breaking out at it because he drank whole milk or some shit.
Oh no, we gotta
what?
Talk.
Whole milk makes pimples?
We gotta talk. I'll just bring up like a couple of websites. This is the secret. This one.
Okay, let me. You got to. Carlos has perfect skin. I saw in Vegas when we were sleeping together. So
I would.
Yo, I tried to
He,
get
like,
into
all
Carlos's
over
bed,
his
and he,
body.
like, he's
Oh,
like,
dude,
get
it
out
was
of my
on.
room. I was
It
like,
was fucking
what? I was
on.
like, we can't cuddle. Like, are you like you do a fucking podcast? You can't fucking cuddle, you piece of shit.
But again, keep talking.
Okay, so let me go through. So I made some portfolio changes today, everybody. All right, so let's do my portfolio changes today, and then we'll go back into some of the other rally and everything else we saw today. Obviously, Tesla did well, Palantir did well, a bunch of stuff we got to talk about. And we'll
How
keep
many
going.
people had a?
So I made two.
I had a 5-figure increase today.
Go ahead.
The 5 figures. 5 figures.
Yeah?
5 digits. 5 digits of like.
I did as
increase.
well, but mine was like $13,000. Yours was probably a heavier 5
Slightly
figures,
higher than
I
that.
would imagine.
But it was between
a little higher than that.
Yeah, but it's
Yeah,
still.
put in the
we're
chat
still
if
down a lot.
put in the chat
Yeah,
if you're comfortable disclosing how much did you make on paper today.
Or
Put in the
just,
chat.
4 digits, 5 digits. I'm sure a lot of people had at least 4-digit increases today. They're nice. Listen, they're nice to see.
Yeah.
Yeah.
Okay, Chris, I'm gonna go through my portfolio changes and then we'll go through everything else. And then we'll do the skin routine thing after as well.
Yeah.
Okay. So Carlos has good skin, so he should be able to help you. I made 2 big changes today. Pretty dramatic for my portfolio. One is public, one is not. So let me talk about the public one, then I'll talk about the not public one. So I am in TFC options with KRIS. Mines are January 2025. $30.45 option spreads. Bought them at an average of 378. I sold 45 out of the 91 I had, so basically 50% of them at 399. Got to a high of about 420 today, then it came back down to around 397. So it was a decent sell in my opinion. This was the reasoning for it, and this is going to influence the reasoning for the other sell that I did today as well. If TFC were to hit 45 by January 2025, my spreads would have 4x. Now that I'm public about this, I had $34,000 in these spreads. So it would have 4x, which if it hit 45 by January 2025, which would have been a lot of money, right? That would have been really good for me. However, January 2025 is 14 months away. And what I'm realizing, and I'm taking some of Carlos's advice here as well, is that the goal of options, especially leaps, is to get in and have so much fucking runway that as soon as that sucker jumps, you get out. Right. And when it jumps in a meaningful way, you get out. You don't like let it go and deal with all that theta decay. And I know 14 months is a long time away, but I didn't want to think every single day, January in 2024, that, oh my God, like 2025 is coming up. I'd rather have that extra year of safety on the options. So I looked at the Jan 2026 calls. They're attractively priced for the exact same return, 3.8x, 4x, 3.9x, right? Nothing too crazy. And I get another year of waiting, and I'm not paying an aggressive premium for another year, and I still get to keep a $45 strike, still a 4x return. And
He's
it's actually
evolving. Amit, you're evolving. I love it.
So,
I love it.
So you made money. You made money on those, and those are basically funding. Like you did what TJ did. You're rolling them, just rolling them out to get more time.
Yeah, and now I didn't officially get into the TFC options for 2026. I allocated like a couple grand. I have to allocate a lot more. I'm waiting for better attractive pricing on it because obviously today was a very green day. But the idea was, wait a second, hold on. If I'm getting the same return, the same 4x that I want, it's higher than a 3x on Bitcoin, Carlos. So that's what I'm saying, 4x. But if I'm
you just have no idea.
If I'm getting the same,
you don't know what's coming.
Bitcoin's gonna go to $1 million. I'm gonna be like, oh, where's the 3x? If I'm getting the same 4x and I get another year, another 365 days of waiting for the same premium, I can wait a year. I'm not that greedy. I can wait a year. What I didn't want is in 2024 to me thinking every day, oh my God, 2025 is coming up and this shit's not even at $45 yet. I think by 2026, interest rates come down, things go the right direction. We have 2.5 years of progress, then then TFC will be fine. And then it finally says CPI rally is great, but any macro event that turns the markets negative means more theta decay, which hurts my options. Broader market's still not okay with regionals yet, even though Bill Gross is fine with them. And then I'm taking some of Chris's advice, simply thinking of buying the stock. There's a 7% dividend. The stock's undervalued in my opinion. I get capital appreciation and I get the dividend, so I don't even have to go that hard into options. And so the overall thesis, it exited 50% of the position in the black, buying another year of time for barely any premium. In fact, the prices of the 2026 options are lower than the price of the 2025 options for the same return, and I get another 365 days of waiting. So to me, this was a no-brainer to get out of the casino today, at least with
the key here.
So how much did you? Yeah. The question is, how much did you make on those 45?
I made $1,000. I made $1,000.
Okay. So. Continue because I have a comment to make.
Okay.
The key here that I am very happy to see is that you understand that going further out, there's a lot more mispricing, right?
Yes.
A lot of people don't understand that when it comes to leaps. You actually can beat the market, quote unquote, by going way further out, because there's a lot more options mispricing further out than there is at a closer time.
Correct.
So I know it's super attractive to say, hey, let me buy a 90-day call option or a 90-day put option, but there isn't as much alpha as you think. A lot of that's already been priced in. The further out you go, the more likely it is that you will get to your valuation targets. Also, from the company level, they're in the process of actually improving a lot of the business model that they have, and they're still generating cash flow, which means that the likelihood that they're into 45 and above by 2026 is actually much higher than 2025.
Than 2025. Yeah.
Right. So risk to reward is the most amazing thing in the world. That's why whenever you have leaps, you want to make sure that you're getting as much time as possible going further out. So I'm glad you did that. Good job.
Okay, Carlos, your thoughts?
My only thing I would say is to be careful. I mean, as much as this thing worked out for you, you didn't make as much money. You held
That's
up
correct.
capital for a long time. And if you just go back,
and that's because when in the summer, when the spreads were about 580 and my average was 370, so I would have made like $6-7 grand if I sold the same amount. I got greedy and I said, let me keep it going. And so today I did not want to get greedy, even though I'm making a lot less than I would have if the spreads get more attractively priced. In my opinion, I was like, anything goes wrong end of the year, which there's a lot of shit in the economy. I don't want to be, still stuck on, because I was negative on these options.
When did you buy those spreads?
I bought them in May of 2023, and I could have sold them all at the top of this cycle in August.
Like who? Like
Christopher.
It was July. July was the top.
July 31st, basically.
Right.
Yeah.
Well, yeah, but you bought them. You bought them in May. May, the stock price was there was a good run up between May and July. But this is what we spoke about.
It went to $37. TFC went to 37.
Yeah. And the problem with the options is that although the return is a lot greater, there is a chance for it to go to absolute zero. Like you literally
100%.
lose all the money.
100%.
Whereas if you hold the shares, you're like, well, I can wait it out. You're more protected. For example, like if you were to convert some of these into shares and say, I'm just gonna hold the shares, collect the dividend, and try to get back to the mean, because this was the whole thing when we had this discussion. It's an easy play. This is easy money. It's going to be back to 45. It's not as easy to get back to 45, even for something that seemed like it was a no-brainer and was really disproportionately sold off.
But Carlos, one thing is I still have 14 months for them to get back to 45. My thing was the anxiety around, well, what if in the next 14 months that's not enough? And so to me, I still think they'll get back to 45 very easily, given the nature of the due diligence I've done. I just want that extra year of premium.
But as you wait it out, there is the cost of capital. In other words, that you're
correct. There's an opportunity cost. Yeah.
It's more risky than any other investment because it could go to zero. It could literally you lose all the premium and you don't get anything, right? So I think it's good that you're playing with it and your thinking was correct, but just be careful with the options. And especially when you have the leaps, a lot of times, and I've been guilty of this myself, I'll buy like a 2-year leap and you think that you have to wait the full 2 years, but it's like, no, you don't. If you get your double and if you get your double or triple off of some crazy macro event or a great earnings call, what the hell are you waiting for?
And Carlos, I'm glad you brought that up, because that was the asymmetrical return that we had in July. And one of the things that you have to keep into perspective is just things that are outside of the business that could impact the stock. So like a lot of the reason why I had sold out of it was because I understood that the legislation that was coming down was actually going to be not bad necessarily for regional banks, but not as good, because they were going to include AOCI losses. Like, so if you look at like in the Patreon, I put all the DD saying, look, that there are legislative changes that could be coming that screw over the regional banks in the short term while all of this is going on. So right now is not the time to be in. So I think when it comes to companies and you have to always keep your eye not just on the company itself, but then also what else is impacting the company and its core business model. So, whether you're looking at solar, you're looking at cars, you're looking at, even things like Google, Amazon, Apple, at the end of the day, if they get hit by regulatory actions, if they get hit by macro events, bro, it will destroy the stock in the short term. So you just have to keep your eye and make sure that you are ready to pivot when necessary, so.
But I think one of the reasons why you hold one of those mega cap stocks is because when you say they get crushed, it's a 5% drop. The market cap is just too big you don't really see 10, 15% drops
Well, yeah, yeah.
in those companies. Here,
yeah,
share this.
the much larger ones you don't have to necessarily worry about, but especially if you're looking at companies that are in the mid and small caps, if you're ever doing any sort of investing in small and mid, they can be impacted way more than other. I mean, technically speaking, I mean, you look at the drawdown that a lot of the mega caps had. They're pretty bad. Like, look at Google. One earnings miss and they're down 10%. Huh?
Okay, yeah, Google. But I'm saying, how are we not going to talk about Enphase today?
Wait, hold on. Before we get to Enphase, let me do one more thing that I made.
We're not going to talk about jumping 16% in a day.
Well, we'll talk about that. We'll definitely talk. I wish we have a tally here too. But so the other change I made that was not public is I got rid of all of 100% of
my single Enphase share.
My SoFi options. So I had 250 SoFi options, $10, $15 strikes for January 2025. Got rid of all of them in the green. I think I made like $2,000-3,000 on them, and I put half of the capital from them into January 2026. So they're a little bit more out of the money.
You're rolling them further out. I'm
rolling them. Yeah.
Are you taking?
And the reason I'm rolling. Yeah. So the spreads I had were $10, $15 January 2025. I'll talk about why I rolled them in a second. The new ones I have are $12, $17 2026. My logic is if SoFi can get to $15 by 2025, which was my logic, they can get to fucking $17 by 2026, right? That's kind of the idea here, or at least it'll if it runs up, the 2026 options will print as if 2024 is good for SoFi. The reason I sold out of these suckers is because of two things. Number one, I do not want to wake up every single day in 2024 knowing I've got shit expiring. Like, I don't want to have anything expiring in 2025. I really don't. And so PayPal's the next one to go when I feel that they're appropriate to get out of here. I'm going to get out of there as well, even if it's just breaking even, because I just don't want to live with that anxiety. I'm starting to come up with a philosophy that I don't want anything expiring from a derivative options contract perspective within 15 months of me being alive. That shit needs to be out there, right? And because the anxiety is not worth it. Waking up every day knowing you got 20 grand in this and it could literally go to zero with theta decay. If SoFi just fucks up on GAAP profitability, if Anthony Noto can't get his fucking chief risk officer to not sell 50% of his shares, right? Like, that shit was really annoying me. And so I still believe in SoFi, but 2026, another year of premium I have. And so I get to wait a little bit more longer.
It's good. It's good. Think of converting some of them to actual shares.
That's the other thing too. I was like, you know what? I should buy some shares of SoFi as well if I believe in it. Yep, they're very reasonably priced. They're cheaper than my 2025 options. They're a little bit more out of the money, but it's $2 above my previous strike. They're cheaper. The return's even better, and I get another year of premium. Like, to me, it just made a lot of sense to.
Pretty much ever since I bought the SoFi calls, that they've almost never been in the red. It's crazy. I don't know. Yeah. The time that we got them, but like no matter what, even on really, really bad days, it's still always in the green, those calls.
Yeah, well, I mean,
I have been buying them. I have been buying them lower than the current price. Like, I'll buy them for $5. I'll pay a little bit more premium just to always be in the green.
Yeah.
But it's been good. That's good.
Did you guys buy or sell anything today, or no?
I did not. I was actually going to sell my SoFi calls. I was even going to sell my Palantir today.
Okay.
I was even going to go. I was like, fuck it. I'm up like whatever, 100%. On whatever I had. And
you are. That was one of your best investments this year. That's true.
I was like, I don't even want to deal with the capital gains. I'm like, fuck it. I'm just gonna let it ride. But I've also been busy. You guys know what I've been doing. I've been doing just working at home, and I didn't really have the time today. But I did see the notifications. Enphase up. I was like, okay.
Okay, so let's do Enphase. Thank you, 406 people, for being here.
I know we're talking people watching us right now. Holy shit, where are all you people?
406 people.
That's
watching.
That is literally a jumbo jet worth of people just sitting there listening to us. This is your captain speaking.
Dude, it's pretty cool, right? It's and KRIS is the star of the show, the self-proclaimed star of the show. So he
the self-proclaimed.
He's the reason we got these people here. Right. All right, Enphase, baby, was up 15%. What happened?
Oh, this is what I was saying. Carlos. Yeah, Enphase. Well, it was the bond yields. I mean, it was the treasury bond yields fell and the bond yields fell. So investors felt comfortable giving the energy stocks a premium in the clean energy. That's at least what I was reading initially. I haven't had a chance to read too much about it, but as I know is when we get good CPI reports, or if there's even a hint that these rates are going to come down, I think that's when people are going to FOMO into Enphase. And I mean, look what's that. And I was looking at the charts today. It's hovering around. Can you see that? Okay. Yeah. Okay. So let's do Enphase.
Yeah,
400 people watching us right now. Holy shit. Where are all you people? That's like a, that is literally a jumbo jet worth of people just sitting there listening to us. This is your captain speaking. this is going to be a key test. What's this moving average here is this is the 21 day, right? All right. So there's a possibility that we turn around and we fail here at the $92 level. I feel like it's just popping back up to test this previous level of support. So we'll see. We'll see if we can get back above this. If we can, cool. But I forgot who I was texting with today. Oh, I think it was with TJ. Feel better, TJ, by the way. We got to do something nice for him. If anybody knows, he's been feeling pretty bad lately. But he was happy today. Obviously, he's getting back digging himself back out. But we were saying like, yeah, we didn't buy enough at the $70 level because he was waiting for the 60. I was just busy. But
Carlos, do you think this bump today at 90 is sustainable, or do you think it's just a macro event?
Look at the size of that gap. That gap will most likely need to be filled as well too. Look at these gaps in this chart. It's crazy. So no, I think it's still just incredibly volatile right now, and maybe this is people just buying on FOMOing in, thinking that it's gonna suddenly recoup and get back above 100. I'm not kidding myself. Hold on, I think I lost you guys. Oh, I'm not kidding myself. I'm just trying to continue to accumulate. I think I'm not really going to look. I'm not going to consider anything serious on terms of the Enphase stock price till after we get out of Q4, or at least once we see rates turn around. I do think that we are building up, just like Tesla, we're building up a lot of pent up demand for it. Because people are still installing solar. I was thinking about this the other day. I know two people that are getting more solar. Like people are still installing it. People that understand how the numbers work out in terms of the
but Carlos, I don't think any of that matters. Their revenue guidance was 300 million. That's why I think today was a fluke for Enphase. I really do. Because revenue guidance,
it was tied to the report. My point is that long term, people are still installing solar. People still understand that even with the rates being high, the return on that investment, and the zero energy bill means a lot. And again, as they sell more EVs, that turns into more solar. So I think it's just going to be a slow trickle of these really well-informed consumers. And then the moment that we start to see rates come down, I think the floodgates open and we see an explosion in the stock again. That's why I'm glad to see this, but I'm not getting out the red panties, for the wife just yet. You know what I'm saying?
Okay. Chris, any thoughts on Enphase? And then we'll move on from there.
Yeah,
it's going to zero.
No, it's not going to zero. But
he's like, what was Hoy Miles' stock price today?
So this is one of the things. If it was only Enphase that ran up, then you could say, you know what? Yeah, it's the company that made the gains. But if you look at all the other solar companies, First Solar, right? Yeah, SunPower was up almost 15%. So it goes to show that this was more of a macro related gain. And so, just like you said, it's just.
What is that? Was anyone arguing that it wasn't?
No, some people were that, I just invest in quality companies and quality companies do well. And I'm like, okay, great. That's nice. I'm glad that you invested in a quality company, which I'm sure that Enphase is a quality company. I'm not saying it's not. The point is right now you're looking at just how closely tied solar is to financing. And that has been the main argument that I have been making for the last year. If you remember last November, I was like, look, rates are projected to go higher. So demand looks to get dropped. The key here is that now the demand picture looks better for Enphase. I said there's two things that Enphase needs in order to really succeed and hit that $300 mark or even get up to $400 and $500 mark. Number one, you need high energy prices, okay? And high energy prices come from natural gas. If natural gas has spikes like we just saw because of the Russian invasion, that ends up spiking electricity prices. If electricity prices go up, the first thing people do is say, I need to find an alternative because I can't sustainably pay this egregious price for my electricity. That increases a ton of demand. So that's what solar benefited from in 2022. Since then, the price of natural gas has come down significantly. So that one area is still a weakness for Enphase. On the other hand, you are seeing a possible declining rate environment, which is beneficial for those that are, wanting to switch to a cleaner energy source. So that's good. The one thing that I would say that to look at, and it's a data point that's not very, very obvious, look at how much inventory build is currently in Europe. If you can figure that part out, you will know when to get into Enphase. Don't look at look at inventory in Europe. If you can find installers in Europe, ask them, what is your current inventory levels, especially historically? Do you have more panels and more inverters today than you did last year? And what does demand picture look like? Because from my DD, I'm finding that there is a lot of inventory that came to market during that time where all these installers bought a shit ton of inventory and they're working that inventory down. And because of that, future orders are going to be impacted for Enphase. Until that inventory backlog is cleared, you're going to see underperformance in not just Enphase, but any solar related companies. And that could resolve sooner rather than later, but it all just kind of depends. So I would say believe the company when they're giving you guidance, and that's the guidance that they probably got. That, hey, installers right now have pulled back from buying any additional equipment until they draw down the equipment that they actually bought a ton of during 2022 when the prices were much higher, and they expected that demand to basically stay for longer than what was anticipated. So that's all.
But the one thing to consider is that the inventory, there's a buffer. The distributors, the companies that actually buy from Enphase are the distributors. Everyone else is a reseller. So when the solar installers buy them, they're buying it from a distributor who's paid like the base price for it. So it's more about that. So I hear what you're saying, that some of these installers might be holding some of the inventory, but it's really about what is the number of what is the inventory levels of the distributors, which VITALY and I have been trying to reach out to talk to one of the distributors, because we've talked to plenty of the solar guys, but I don't know if we've spoken to anyone that does the European market per se, but at least in Australia, where solar is apparently just nonstop and they have a much higher rate, they have very little inventory on hand. And that one installer that we spoke to said he put in an order for a $5 million order that would just cover him, I think, for the first 3 months of next year. So it's a lot.
All right, last point, Chris. Then we got to move on. Go ahead.
I also have one more point to make, but
the hard part here, Carlos, is getting real data and real information out of the installers. When you guys do your interviews with the installers, it's great. That gives me confidence on the product itself. But in terms of business, it's like asking it's like asking the converted for advice on religion. You're not going to get the most objective answers, especially in terms of business. In terms of product, it's fine. Yeah.
No, but we asked them, like, how's the business going? And they tell us the rate environments are this. And we ask them, what are you doing to mitigate the rate environments? Are you eating into your profit margins? Are you finding yourself what are you doing to incentivize customers to continue to get solar? And they'll tell us, they'll tell us what they're doing. They're honest with it. They're honest about it. They don't really have a reason to lie or pump it, because most of these guys don't. Here's what's funny: most of these guys don't even own shares in the companies of these solar manufacturers that they're installing, which it blows my mind. One of the guys had Enphase and he ran up from $25 to $100 or whatever it was, and then he sold it out and never bought back in again. Even the guy from Australia, who is probably one of the top Enphase installers in the world, it does not hold any Enphase. And I'm just like, wow, that's crazy. You make money on both ends. But I did want to share this piece of information, because while rates are you're right, rates are important in the amount of inventory, it's important to understand this statistic. Can you share this screen real quick? I don't know where they're getting this from. 30 to 40% of people in California with EVs, for example, also have solar panels. I understand that California is not necessarily indicative of the entire country, but if this holds true, and Tesla sells 1.8 million vehicles this year, and Chevy and and GM and Ford, they continue to sell and hopefully increase the number of EVs that they're selling. They're not saying people with Teslas, they're saying people with EVs. So in general, say 3 out of every 4 people that buy an EV, regardless of the automaker, pair it with a solar system. And we know that 60% of those customers are Enphase, and say 40% or 30% are SolarEdge and whatever's left. So like you were saying, macro things outside, like we talk about TFC, things outside of the business that still affect the business. They're selling more EVs now than they did last year and then the year before. And that is sort of helps buoy the system and create a slow trickle in the upwards direction, even if it's not the explosive growth that we want. There's sort of a built-in level of growth there. And those are customers that you'd say, arguably, Enphase doesn't have to reach out to, doesn't have to catch them. They're not necessarily, there's no cost of acquisition for those customers, right? They just, hey, they have a EV and then they start looking into solar. They find the local installer, and that guy, 6 out of every 10 installers will be pushing an Enphase system on them. So
what's really interesting that a lot of hedge funds are doing? They're actually contracting with satellite companies in order to do these large scale like monitoring of different data points that don't necessarily come out right away. So as an example, I was reading this story about, there was a company that they had like a production facility, and so how many cars were outside at any given time of production, right? And basically there would be like a satellite taking images of how many cars were going into the parking lot, how many were leaving, and then
Of
using
where?
that
Like,
data.
of what building?
Huh?
Of what?
No, but
what
that's the thing. Like production in China, like it was like different things. Like, all right, imagine right now you had satellite images of every Walmart every day at every time, right? And this way you can see what the traffic looks like, and then you could do historically go back 3 years. You would look at all the time, run an algorithm, and see, okay, Walmart typically has, let's say, 30 cars last year in the month of May during this time. Once you put all of that data together, it gives you an idea. Hey, is Walmart going to have an exceptionally great quarter, or is it going to have a shitty quarter?
This
And
is
then
what these
based
hedge
on
funds
that,
do. They spend a shit ton of money
yeah,
for this data.
yeah, and that's one of the key things. Like right now, Carlos, imagine right now you were able to have all the data on all the solar contractors out there, installers,
Oh,
see what their inventory levels look
no,
like.
I'd
You
love to
know,
see that, or even just taking pictures of neighborhoods and seeing who's
yeah,
installing solar panels. When you said satellites, I thought that's what you were talking about. There's a guy who
yeah.
famously did that with oil. I forgot who it was.
Mhm.
We played his video, but this is a picture my wife sent me today. Right, so she was just out. She went to the doctor's office, and she's like, "Holy shit! Look what I'm seeing here. Do you guys see this?
Yeah,
Those old
Teslas.
Teslas. Yeah.
This is just a random parking lot in the middle of California, and above that are all solar panels, which is annoying
That's a
because they
random
don't have.
street in Jersey as well. Yeah.
But I mean, there's 6 of them in a row. So if she parked a car there, she's like, I don't even know which one is mine. We're seeing a lot more. Even I know I keep saying that, but we're seeing a lot more now with the new plates, those like temporary plates. I'm seeing a lot of them out there with temporary plates. So I'm curious what production is going to be this year. It's just a few years from now. Our roads are just going to look fundamentally different, and it's going to be fun looking back at these, watching back these videos in a few years, just like the crypto ones. Like
Justin Heinrich says that was in the TV show Billions. Absolutely. They also showed there was I don't know if there's a character called Dollar Bill, but basically what he did was he broke into an auto parts store and then looked at the inventory that they had. Like,
see what they had.
dude, I'm telling you, man, if you can get the inside loop on certain things, like this is non-traditional investing. You can freaking kill the market like beyond what people like. Imagine how important this BLS data was. Like, imagine you knew maybe 10 minutes ahead of the published data what the CPI was going to be, right? And you were able to buy a fuck ton of options.
It's very valuable information. There is a famous investor. We've played the video before who was trying to invest a lot of money in oil companies. And so he had a friend who would give him satellite images, and they would check every day the levels of oil all around the world, like in China and in India, because you can see from space, you can see the levels. And he would, does anybody know who that is? I probably can find the video on YouTube. And he freaking killed it because he was able to accurately predict what the levels were in the actual level of oil reserves, so he was able to.
This is why people pay for that Bloomberg terminal too, right? It's just like access to data quickly.
It just goes to show, like, really, the data is the king. If you had all access to all the information, right, you can make.
So I'm saying Palantir,
Decisions, perfect decision. Here we go. Give us if only there was a company that could aggregate all this data and help me make
data and become the modern operative
business decisions.
Okay, let's do this segment real quick. Then I have a question from Chris. Share this real quick, then I'll do.
Are we doing the skin thing? Because I got these freaking.
Yeah.
No. We'll do that off camera. We'll do that off camera.
Yeah. Just one thing real quick. So this guy, I follow him on Twitter. I love the data that he presents. I will never touch natural gas again because natural gas is a goddamn widowmaker. If anyone's ever lost money, ever made money in natural gas, please let me know, because I've never been able to successfully make money in natural gas. But I know people that have been able to do it. But it's guys like this where they'll actually do like weather forecasting, polar data. They'll go historically into like weather patterns and stuff. And then it's crazy the amount of data that's there, because a lot of this stuff can actually help you determine what the price of natural gas futures are going to be like. And then based on that, you can actually do some investing. So like, look at this guy. He published this data not too long ago. And right now, natural gas actually spiked from $3 at, I think, Henry Hub to about 320. Now, this seems like a very small amount, but in terms of futures contracts, bro, if you had the inside loop and you could predict the weather, you could absolutely kill it in commodities. So it's just things like this that it's like non-traditional investing. That's really cool to see.
Mm-hmm.
Okay, let's do this real quick. Buffett sold a bunch of shit today. He sold GM totally, sold Activision Blizzard, sold Procter & Gamble, sold J&J, sold a little bit of HP and Chevron, and he started a new position in SiriusXM. Howard Stern's major, well, Howard Stern doesn't own it, but he's the face of that radio company.
Don't you think that's just to
thoughts on that?
deflect away from the supposed insider trading that he got hit with?
mean, yeah. Oh, you mean on Activision? But yeah, probably.
No, yeah, he got caught out there. He got caught out there personally buying stocks in companies 3 or 4 months before Berkshire Hathaway bought them. You know what I'm saying? So he's basically able to capitalize on the appreciation personally because his company bought massive positions, bigger positions than he would have been able to buy. Who knows? Maybe. But do you blame him for selling GM? The Activision thing is a little bit weird, Procter & Gamble, Johnson & Johnson, but I can't blame him for selling GM. He only sells companies when he feels the fundamental thesis is broken. Like it's just absolutely broken. Because normally he just will just hold if he feels like the company's, it's a very simple calculation, right? In terms of the company's still making money, their market is there, and and management's executing. That is not a good sign for GM. What is GM's stock even at right now?
Like $29. Chris, your thoughts on it?
I think Buffett is again, by the way, tapping Japan. Did you see this data?
I did not.
Again, this dude again sold Japanese bonds in the Japanese market and bought up more Japanese companies. There is something there that I am literally just like weaseling my way into this data to figure out what his actual motivation and moves are from a valuation standpoint. But let me tell you, boy, Buffett is just so bullish on Japan right now, and especially the major trading houses in Japan. He just keeps issuing this Japanese yen debt and just buying these trading houses. Like I said, Buffett is just on another level of fucking investment god, bro. You can't even knock it.
Mm-hmm.
Yeah,
but I don't understand the serious play. I don't understand the serious play.
Is there a dividend on Sirius? Let me see. Is there a dividend? Because
that was
I don't know what hypergrowth he thinks is.
Honestly, that was one of the first companies I ever bought.
Yeah,
when it was just Sirius. So what's the ticker's XM, right? Because they're under XM now.
No, it's no, I think you're right. It's Siri, which is
okay,
funny
so
for a lot of reasons. But
2.18%. Wait a second. Look at its financials. That's what Buffett is doing.
Fucking Chris found something. All right, Chris, share it. What'd you find?
No. You got it. Just look at its financials. Look at right now. Go to financials. This son of a bit. Look at it. 46% year-over-year net income growth on a quarterly basis. Look at June through December. What is causing this giant spike in net income? Look at this. What is that? On a TTM basis, that's almost 1.2 billion in net income. And then the stock is trading at $4, which gives it a market cap of about 18. I wonder, and a PE of 15, which is reasonable, but nothing that's opportune, like super opportunity. But
net profit margin is up almost 50% year over year.
That's nuts, right?
Look at the operating income. Look at the cash on hand.
Yeah, and look
how much cash do they have on hand? Hold on.
Yeah,
I'm gonna
look at its operating income. Look at its operating income.
Hold on a minute. Hold on.
How come I never? Why didn't I not look at this?
Chris, pull up your alpha spread. Pull up your alpha spread.
Yeah.
You should look at this.
Yeah, I'm pulling it right now. I'm looking at it right now.
This is interesting. Let me put one stat out there while Chris is doing this. Spotify did about like $11 billion of revenue in 2022, and SiriusXM did like $10 billion. Spotify is a tech company in audio. SiriusXM is literally just a media company in audio. So it's very interesting that Sirius is doing the same amount of revenue as Spotify, even though it's not a tech company, which is incredibly interesting.
I mean, on an operating income basis, they're pretty flat, but in terms of valuation, it's not that bad. I mean, I don't see the opportunity, to be honest, after looking at this just on a year-over-year basis. Maybe there's something there, but revenue is steadily increasing, but nothing like, oh my God. Net income is okay. The PE is fair. It's not like, oh my God, undervalued. My guess would be.
Yeah, see, they did 9 billion in revenue, bro. Spotify did like 10 billion. It's almost the same, which is why they are a powerhouse in audio. I mean, they're a force to be reckoned with.
But it does seem it does seem so like early 2000s. Like, who the hell is
it? Really does. Like, what is he seeing here?
listening to
How much
Sirius
debt do
right
they have,
now?
Chris, as well? They have to have a shit ton of debt, I would imagine.
Share this, because I just asked ChatGPT a breakdown of how Sirius satellite radio makes its money. So what's according
It's
to
just ads, bro. It's literally ads and subscriptions.
Subscription fees is the core source of revenue is subscription fees paid by subscribers. Customers pay a monthly fee or yearly access fee. Advertising, in addition to that, they generate revenue through advertising, OEM original relationships. So that's them getting those relationships that when you buy a car, you get like a year free. Aftermarket radios and devices, internet streaming. They also have an online streaming option, allowing subscribers to access content over the internet. Content partnerships. Invest in exclusive content and partnerships with celebrities, brands, blah, 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 royalties and licensing. Sirius must pay royalties to artists and copyright holders for music played on its channels. The fees are part of the operational cost and are essential consideration of the overall revenue model. Yeah, I would probably say it's these two, subscription fees and advertising. But my God, how many subscribers do they have? That's my next question. Let's see.
Oh, I'm looking at this wrong. Sorry. Wow. I was like, what the hell? This... What does Buffett see, man? Long-term liabilities. They've got almost 8 billion in long-term liabilities, which they are paying down some of it. You can see here.
All right. So without checking the internet, how many paid subscribers does Sirius satellite have? Monthly paid subscribers. What would you guess? If the number of Spotify has
monthly subscribers,
is right here, just to compare.
Spotify has 500.
Spotify is the most popular audio streaming subscription service with more than 574 million users, including 226 million subscribers in more than 180 markets. So that's the benchmark. They're the number one, 574 million. How many does Sirius have, do you think?
Subscribers that are paying monthly for premium audio. I would say they have 50 million subscribers.
Okay, what's your guess, Chris?
I'd say maybe 25 million. I don't know anyone who has Sirius in my opinion.
Me neither. Here's the answer. Dun, dun, dun. 34 million.
Chris was a little closer to me.
That's way
34
honestly,
million is.
Did not expect it to even be that much. I was thinking like 11 million. How the hell do they have 34 million subscribers? I don't know if that really counts. If you buy a car, 30 subs. 30 subs.
A little bit more. 34 million.
The thing is, though, if you buy a car and it comes with a year subscription to Sirius, like that doesn't really count. It's like how many of
dude, but what do people listen to on Sirius other than Howard Stern? I mean, I know there's probably some
music, sports, entertainment, comedy, talk, news, traffic.
Yeah, I don't understand why Buffett's in this. The debt is growing. The assets are not. The assets are actually under the debt, so it's actually negative equity. This is not a Buffett play. I don't know. Robinhood probably makes more sense than fucking Sirius.
Fuck Sirius.
Robinhood is mostly fucking cash right now, sitting in cash. I don't know.
That is interesting.
Is there any world where Buffett's stuck in the past and he's thinking that people are listening?
Yeah, I think some of it is that he's not. I mean, maybe that's as far as he goes. Like anything past 2005, he's like the companies don't exist.
Yeah, someone said maybe he doesn't pick all these stocks. Yeah, maybe that's the other thing too. That there's other people. I mean, at the fund, they're taking more of a proactive role. Like the new CEO. I mean, not CEO. The new people over at There's two guys at Berkshire who might be. But still, Sirius XM, come on, man, that doesn't fit in with Buffett's philosophy and valuation.
If their number one ways of making money are subscription fees and advertising, and number three is by these relationships that they have with car makers, he's got to see something or know something that on one of those three. I don't see there being subscriptions. I would see that either it's seeing something in advertising or having to do with
yo, this one.
How the fuck? Oops. Fired.
He meant to buy Spotify and his intern. Bro. There's no way he would buy
Broccoli Bob. Yeah, maybe one of his people bought that.
See, what doesn't make sense is you don't technically need satellite radio anymore. Like you can do everything through your cell phone, which is just connected through your internet via the fucking 5G and 4G and LTE waves. So the question that I have is, who the hell is getting Sirius XM? Like right now, think about it this way. You guys are in your car, right? You're not like, oh yeah, let me turn into Sirius XM. You're just like, whatever, Bluetooth my phone and listen to shit from my phone, right? That's what I do.
You just have the vehicle access accounts that you already have. Like your vehicle can access your Spotify account directly, just like your smart TV. So I don't know. But I mean, Crossroads is saying there's a rumored acquisition target. But why would he want to buy a company that's going to be acquired on this? I don't know.
I mean, maybe there's a premium there on the acquisition, but who the fuck's buying Sirius, bro? Like Spotify. I mean, Sirius is doing what, 1.2 billion in net income? Spotify can't afford that. There's no way.
G10, I don't know if they're doing share buybacks. I have to see if they have a buyback program in place. I'll double check. It's going to take a lot more deep diving into it. But yeah.
Why does Buffett like these old ass media companies? Paramount, instead of Netflix, Sirius, Viacom, which is CBS, which is basically Paramount. Like I guess the dividend, right? Because the other streamers don't pay anything outside of growth. So
I don't know.
Very interesting. Okay, let's do one last question.
There have been share buybacks, by the way. I'm just asking.
Wait, hold on. Gary Tan actually put a very, very interesting thing. He wants the spectrum. Okay, that could be a very, very interesting play. Okay, so you guys know how spectrum works?
We're saying the actual spectrum, the radio frequencies.
Yes.
Oh yeah.
So what typically happens is the FCC auctions off like different spectrums to different providers. So Sirius XM has a certain spectrum which they broadcast the signal at. Lately, like T-Mobile, Verizon, AT&T, they bought up a lot of spectrum in 2020 and 2021 in order to actually have 5G go out. So T-Mobile had a certain part of that spectrum, and Verizon bought up a lot of that spectrum, and they paid in the billions. Like I'm talking about tens of billions of dollars to get those rights. The question here is, does XM have a specific spectrum that makes sense for the future, like a 5G play? I have to do more research. Thank you for bringing that to my attention. I will definitely check that out. Because if there is competitive bidding and XM just says, fuck it, we want to close down our business and just sell off our spectrum rights, those could be in like the not 100 billion, but those could be in the tens of billions of dollars, which means that after all the debt plus the cash and the assets you put on there, it could be a giant value play. So I will definitely look that up.
ET FaceTime at 6:53. This is like a murder mystery. I was feeling the same thing. We're all like playing a game.
You guys literally just saw us for the past 20 minutes put the clues together.
Playing a game of
this is what you get on Planet Junkies. Try to break it
most
down.
of the time I'm doing that by myself. Like I'm not doing that like while we're actually streaming. I'm just like looking like
no, but see, this is why I think this is why people kind of like the show a little bit, because for the past 20 minutes we're trying to figure out this mystery.
We're
and
just
like
regular, honestly, we're just regular people. Like
But like regular people don't have other friends that do. Like I have no friends that would sit with me for 20 minutes. Be like, why did Warren Buffett buy Sirius XM? Like no one would fucking do that,
No, I had a buddy come visit me the other day. It was during Novix's earnings call, and I felt ashamed. Like when he walks in, he's like, "Yo, why do you got all these Indian guys?" Because I had the volume off. I was like, "It's just the company that I invest in." And he's just like, you're watching the earnings call.
Like looking at the market.
Just like I felt like ashamed. Like, I'm watching an earnings call at like 2 p.m. Yeah, I know the Dodgers are playing. I know.
Your guys' wives ever make you feel like that when you're researching a stock or looking at charts? Do they ever make you think like, get off those stupid charts or anything, or they understand?
No, she doesn't really care.
She sees her portfolio. She's like, get your ass back to doing research. Yeah, because I manage her portfolio. She's all for it.
I purposefully didn't say anything to my wife about investing for her. I was just like, oh man, like, this is going up, this is going up. And then I was like, I'm going to wait for her to ask me. And then she was like, is it really, like that easy to make money, And I'm like, yeah. I mean, it's not always this easy, but if you pick the right things, she's like, what if I gave you $1,000?
I love that, because that's how my sister was in May. She's like, I got an extra 10 grand. Can you do something with it?
Everybody across, it doesn't matter. Everyone likes to make money, man. You know.
Oh my gosh, this is great. Okay, one last question for you guys, and then we'll end it out. Bay Ray texted me last night. He had a big question for you guys. His question is, when does the market react when we get the first interest rate cut? So the question is there a lag if we get a cut in May between the market reacting, or do you think the market is forward looking so they know before the cut, or how do you think that kind of plays out?
No, they'll be watching that by the second. The moment he announces it, the moment it leaves his mouth at the podium, everything just explodes. Are you kidding me? Like a geyser at fucking Yosemite.
So you think there's no lag? You think the rates get cut and then
hell yeah? Then it's like everyone knows it's back. It's risk on, baby. You know, risk on. Which I'm hoping it happens. I'm hoping it happens in like February, March, like right around there. Let me look at when the Bitcoin.
Well, some new analysts think it's gonna. Before they said May, now they're thinking March. Chris, do you think there's a delay between that cut, or you agree with Carlos? When it gets cut, it's gonna affect the markets quick.
Honestly, it's going to be a crapshoot. I don't know what the cause of the cut is going to be outside of just us getting to that target. I do know which sectors that I want to be in. You know, that's the only thing that matters to me. So in terms of long-term investing, I think this is an opportunity for the next 10 years, you know, so you have to look for companies that fit into the yeah, like I said, I have a list of companies that are on my radar that basically fit the strategy. And so next 10 years, you could see them return to hyper growth mode if things turn out the way they're supposed to turn out. Dude, this XM thing is getting on my nerves now. I have to dig. Shit.
I gotta talk to my boy Phil. We've had him on the podcast before. He's always got some weird plays that like nobody knows what's up, and it's up like 70%. And he's like,
yeah,
made a fuck ton of money. I'm like, damn, why don't you text me, man?
Yeah, I mean, it's going to be really interesting. Garcia says, isn't there data showing that the market would go down on rate cuts for some sectors? And I think that's Chris's point. Like, if you're in the right sector, those rate cuts are really going to help. Some sectors might
basically look at all the areas where there is just a built-up tension, both in like I would say like an Enphase, where there's like pent-up tension on the consumer side, and then pent-up tension, say, on the investor side, right, where people want to invest, but they're waiting for rates to come down. So I think I'm in a lot of those actually. I'm not say super concentrated, but I'm pretty concentrated.
So just to show you guys, these were the different spectrum auctions that happened in the last like 20 years. So these were the different spectrums that were there. The major one was the C-band spectrum that almost got $100 billion of revenue from the telecom companies. So the AT&Ts, the Verizons, T-Mobiles, they bought all of this spectrum, and it resulted in almost $100 billion in proceeds. A lot of this money went to satellite providers, satellite companies that typically did like satellite internet and stuff like that. Like one of them was Intelsat. Yeah, so like I said, this is something that we have to dig into to see, like, hey, what is the value of the spectrum that Sirius is actually holding right now? And if it's something that could be something major, believe it or not.
Bay Ray's comment, Sirius Weekly coming soon. Amit's like, what? What? He's like, I'm gonna do it on Sirius satellite radio.
I'm like, if Buffett's interested in audio, I got some ideas.
That's
for
Buffett.
Right. You know, he's really interested in audio. P-Sesh, thank you for the $5 super chat. Thanks for the pound tier tip, Amit. Chris, I became a Patreon member yesterday. How can I see your list? Chris, you got to link the Patreon, man, in the chat.
The list? I don't have an active list. I just have postings of different companies that I'm researching. So I should create a list, though. Eventually, I will. Yeah.
It's in the description, guys, if you want to join his Patreon or Carlos and Vitaly's Patreon. It's in the chat, so you guys can check it out there. Or in the description. All right, 459 people here. Thank you. Please like and subscribe. If you're new to the channel, please make sure you subscribe, and you'll get notified 9 p.m. every single day. And yeah, this was an exciting day in the market.
Before we go, I don't mean to pull a Chris where I start a whole conversation right when we're like saying goodbye. But have you guys heard that Ron Barron supposedly knows who's Elon's successor at Tesla when he leaves?
It's the Chinese guy. The Chinese guy.
You hear that? Did you see that interview with him recently? Where he almost flipped and almost said it. He almost said it.
So there's a Chinese guy replacing Elon when Elon leaves?
Tom Zhu. They brought him over from China. He was running something over there in China. They moved him over here. And Ron Barron almost said it on an interview that he would be the successor to run Tesla after that was. And he also kind of told people that the next gen vehicle is coming within a year and a half to 2 years. The next the cheap vehicle. So he knows some stuff. I mean, I guess when you own, what does he own? Does he own 5% of Tesla now?
Hey guys, I gotta go.
5 or 10%?
Join Matt Money on Cash Flow Chronicles. So I will.
Oh
see
shit! You see that? He's just getting up from he's speed dating now.
He's like, I had some time with you guys. I gotta move on. Well, we'll discuss that. Chris, I'll see you later. We'll see you later tomorrow. Yeah. We'll discuss the Ron Barron thing more. I mean, Tom Zhu, I don't know who this guy is. I've heard of his name, but
let me just see if I can.
Do you real quick? Do you think a Chinese guy is taking over Tesla because China's their largest market, so that's why he wants them to take over?
I don't know that Tesla runs that way. It's definitely good to have a Chinese guy but you have to understand, China kind of asked Tesla to come there because one of the reasons why Tesla is the only company that doesn't have a Chinese partner. You know, like if you want to have a business in China, you have to have a local partner in China.
Correct.
And they basically have to have a percentage of your company. The reason why they don't have that with Tesla is they wanted some of Tesla's manufacturing secrets, or good best practices. In other words, they wanted Tesla to help them make their local Chinese manufacturers better. And so that was a bit of an exchange. So there's a bit of like, they're scratching each other's backs. But if the guy's as good of a performer as they say he is, then yeah, you would want an executor in there. I just found it interesting that he slipped it out. I don't want to get into the whole thing now, but I'll see if I can, I'll find the video. It was the last video, one of the recent videos.
I think if Elon were to step down, I think a lot of Tesla investors would not like that.
No, I don't think a lot of, but I also think there'd be other people that would. You know?
Yeah, no, you're right.
There'd be other people that would. I don't think he would step down realistically, till bot is out. I think once the bot is out, and that'll mean that you have the next gen vehicle, Cybertruck will already be out on the road. Maybe around then, I think if he wanted to step away, that would make sense. But a guy like that, what's he going to spend? What's he going to do with his time? SpaceX is already up and running. You know what I mean? Like, I don't know. But if he did want to, I think that would be it. Where he would sort of foresee the vision. We've got the full lineup. The bot's out. You know, AI is out. FSD's out. Okay, I'm done. We'll have somebody else come and just execute on this shit. Just keep doing.
Dude, but like the bot, the Optimus, all that vision. That to me is Elon. It's not a Tesla vision. Like the Model 3 is like a Tesla execution. Everything else, that trillions of dollars, that's Elon, baby. Like I don't want to bet on anyone else.
But at that point, I mean, you know how much? Listen, if and when they get FSD to that point where we're talking, it's licensed by everyone and basically recognized as like the only autonomous software, and you get to the point where you have bots that are actually working in factories, and you go to McDonald's and it's nothing but these bots that are talking in Grok's voice from fucking AI, XAI. I mean, really think about all of it comes together. I mean, what the fuck is left for the guy to do? That's just a massive career mic drop.
All right, one last question. What do you think of my rings? So I started this new thing today where I started wearing these rings. I think it looks really nice on my hands. Do you think it's like it's a style?
I think that's very Armani Exchange, like late 90s. Like you were born in the wrong era, bro.
It's very cool. You see with the bracelet and the little, I think this is like a cool, like my hand looks cooler.
Most people that wear that stuff do, and I do too. I have a lot of those things. But my wife told me you don't look as cool as you think you do.
Okay, so maybe you can get away with it. Your wife told you the same thing Kelly told me, basically.
What?
I thought it looked cool. Kelly was like, it doesn't look cool. I was like,
I know. You start to, it's like one of the, what's that shirt? The Tom Hardy, the Hardy, like we feel like badasses in them, but I don't think chicks.
Guess how much these rings cost?
They're like $2 for $1. $5 and you to grab it at the counter.
But they don't actually look that cheap. Right?
but that's the thing. They do.
They look like those fucking rings that they charge $100. The Orgu rings or something. I forgot the brand. They actually look pretty expensive. Kind of.
Kelly's like, if it was just one.
But not the double. No, the double is what gives it layers to. That's what Right. All right. Anyway, thank you everybody for joining. We'll be back tomorrow, 9 p.m. Eastern. This was fun. See you guys tomorrow. Bye guys.